Hello and welcome to Piperaise. In this video, I'm going to walk you through Piperaise Pro and help introduce you to some of the different modules that we cover on a week-by-week basis. So Piperaise Pro is our core coaching and guided program for early stage and first-time founders that want to learn how to build and implement the most effective fundraising system and funnels for their startup to be able to land the next investment round. But before I get into that, I first want to give you a quick introduction to who I am so that you have a bit of context into my experience and the role that I play in the different Piperaise programs. So let's get into it. So my name is 𝗶𝗿𝗃𝗴𝗺𝗺. I'm the founder at Piperaise, and I'm also the head coach through all of our programs. Now, just for your context, Piperaise is a company that's registered in the USA. So coming back to this, in terms of my professional delegation, I'm a chief marketing officer or chief commercial officer, and I have been, building up a career over the last 14 years in that particular space. So I handled all of the marketing, the business development, the lead generation, and also the sales functions for different organizations that I worked with. So as I mentioned, it was a career that spanned across 14 years. And what's interesting is that I actually worked across different types of organizations and sectors. So I've worked in the startup space, and that meant working with companies, SaaS companies, Web3 companies, companies that were in the health tech space and the fintech space, and even FMCG companies throughout my career. From there, I moved on to the agency side. So most recently, I was the agency director for a government-based organization that put on world-class events, multi-billion-dollar kind of events, such as the Formula One, the UFC, the NBA games, and that was everything across marketing, creative, digital, and event management. I then moved on to consulting. So I pretty much joined a consulting tech firm as the chief marketing officer. And that firm focused particularly on enterprise SaaS and B2B contracts ranging in the millions of dollars. And it centered around everything around, technology, data management, even AI and blockchain. So in that role, I really focused on the go-to-market strategies, partnerships, and alliances for giant tech companies in the US and in Europe that wanted to expand across to the Middle East, Africa, and Asia markets. Some of these companies include Snowflake, ThoughtSpot, Dataiku, AWS as well. So I was in that space when it comes to the consulting from a tech and data management perspective. I then moved on into the venture capital space, which I enjoyed quite a bit. I was doing a lot of investor relations and fundraising as a service. So it meant building those relationships with investors and also working with first-time founders and early-stage founders who wanted to raise their seed or Series A rounds. I offered advisory services and guidance on how to build these systems and run it to help them land their investment rounds. So this is a breakdown, of my experience and where I'm coming from. And the end goal here is to take all of that experience, that knowledge and expertise and channel it into something that can really deliver value for first-time founders and also for investors alike. And all of that experience, knowledge, and expertise is what I'm putting into Piperaise, which is a company that I founded. Now, Piperaise has 3 different focal areas, right? The first, of course, is our guided coaching programs, which is one-on-one, or it can be, with 2 or 3 founders. And the idea behind this is to teach them everything that I did for those $10,000 a month clients in the VC space. It's pretty much condensing that into a program where you will learn all of the tricks, the tactics, the strategies that you can adopt and apply in your startup to help you manage your fundraising campaigns from start to finish. It's targeted for early stage startups, so those raising your pre-seed or seed, even Series A rounds. And again, it's geared for first-time founders who don't really know how to navigate that investment or fundraising landscape. Either you don't know where to start, or you're looking for something a bit more structured to help guide you step by step through that process. And the bigger vision for Piperaise through our guided programs as it grows is to also bring on experienced coaches who are also ex-founders or ex-investors or current investors to be able to advise you along the way. Our Piperaise Pro program, it includes a VC analyst as well to help review your pitch deck, give you that analysis so that you know what to tweak, what to change, before you start pitching out to investors. So that's the program side of it. We also have the private community that I'm building, which includes founders and investors. And the whole idea behind that is to really foster better relationships so that you're not relying on cold outreach to investors you don't know, but the community will help facilitate, warmer introductions, warmer pitches, so that you have a better chance of building those relationships and also closing some deals there. The community will also have a lot of resources that we're going to be putting into there. These could be things like templates, toolkits, checklists as well from VCs that you can follow to help you on your journey. And of course, what's also driving that community is going to be private events. And that includes access to either, experienced investors in the VC space, angel investors, family offices, accelerators, and also some experienced founders. We can join some live events. These could be webinars or online streams where you can learn a little bit about their experiences, what they've done, a little bit of insight into the industry as well to help you along the way. And the last pillar of what we're building with Piperaise is our strategic alliances. Now, this involves me building relationships with venture capital firms, with angel investors, with family offices, accelerators, and incubators, just so that we can bring in a bit more value through the community, and also to have a better understanding of these different investors and what their thesis is or mandate is when it comes to their investments, because each one has their own. So the better we can understand what they're looking for, we could actually build out a checklist and give that to founders so that they can make sure they're ticking off all those boxes so that they know this is the perfect, investor that I can approach to raise my round. So that is a quick overview of what we're building here at Piperaise. The main goal is to be able to cultivate warmer relationships for founders and investors, to build better alignment so that you're not engaging with the investors who are not aligned to your vision or your industry. That way, saving time on both sides. It's also about driving better direction in terms of the industry so that we can collectively move in that same direction. And like I said, it's all about those warmer introductions, warmer relationships that we can cultivate to be able to drive better results. And of course, the end goal here is delivering real value for founders and investors alike. So now that you have a better idea of who I am, let's take a look at the Piperaise Pro program and everything that it includes. Now, this is an introduction to Piperaise Pro on a week-by-week breakdown. So what is Piperaise Pro? Well, it's a coaching and guided program for early-stage startups and founders that want to learn how to build the most effective fundraising system and funnels that will land them their next investment round. Right? This is a 12-week program. So if we look at it, starting from week 1, week 1 is all about creating your fundraising strategy and roadmap. So firstly, we go into deeper details from understanding your business model and the market opportunities that you're going after. We help you to identify your ideal investor profile or IIP by the niche, by the market, and by the industry that they're investing in. We help you to set realistic goals and fundraising timelines, and also set up some milestones so that you can also understand the entire process that goes into landing your next investment round. Right? A common mistake I see a lot of founders make is they really underestimate the time frame and the timelines for fundraising. So this is where we help set that in motion, build out a roadmap, and make sure you have a clear guideline towards achieving those goals in that fundraising journey. Now, in week 2, we get into the core of starting to actually build out your fundraising system, right? What do you need to build solid and scalable fundraising, or investor CRM. While a lot of founders and startups will already have a CRM, it's primarily used for sales. Now, this can be a decision that you take, right? Do you want to use that same CRM that you're using for sales for your investor database and your investor engagements? Well, I advise not to. My preference is to always have them separate, because there's different strategies, there's different workflows that you're implementing in your sales CRM that you would for your investor CRM. So this is where we dig deeper, right? If you're using, or if you want to go with a legacy CRM like your HubSpot, your Pipedrive, your Zoho's, your Salesforce, then there is a bit of additional workflows and additional layers that we have to add on top of that to be able to achieve the same result that you would get with newer CRMs that are out in the market that are doing some really interesting things, okay? Especially when it comes to data enrichment and identifying who that right target audience is and how you actually handle the outreach with them. So again, if you want to go with the legacy systems, you can. It's just going to require more workflows and might cost a bit more in, achieving the same result. So these are things we'll unwrap and see which is the best option for you. Okay. We'll also guide you through how your pitch deck is structured and what needs to be included. At this point, if you don't have a pitch deck, you can follow the guide to be able to create something that's going to be highly effective in getting the investor attention and helping you to convert them through each of the different phases of your pipeline. If you already have a pitch deck, then great. What we'll do here is start looking at it and going a bit deeper within the next week into what needs to be optimized, what needs to be changed. Okay. How do you develop a scalable investor outreach system? Within week 1, we actually look at what are those systems that need to be set up for your outreach. Often, cold email is one of the most common and, admittedly most effective system really to use to land those investor engagements. Especially from my experience, cold email can be annoying, but when you do it properly, when you set it up correctly, and when your sequences are really, I would say structured and tailored towards those investors, you really do see a higher conversion rate. It's an art that we have to perfect, and it's what we'll do in this program, right? If we're using cold email as an approach, again, we need to make sure that we set up your domains, we set up your mailboxes, and we put them through a warm-up phase so that, those emails don't end up landing in the spam inboxes, but rather into those primary inboxes. And in order to do that, it has to be scaled up at I would say at a realistic timeline and rate, so that the internet service providers like your Googles, like your Microsofts, don't flag that as automation or robotic behavior, which is what can lead you into spam. So in week 2, this is what we cover. Now, week 3 is where we actually focus on your pitch deck analysis and feedback, right? This is where we go through a bit of a pitch deck review with our VC analyst so that you can get more insights into what is working, what's not working, what needs to change on a slide-by-slide breakdown, right? You're going to get constructive feedback and recommendations from the VC analyst in terms of how you need to structure your pitch deck and enhance it overall so that your pitch and positioning is on point and it's according to what investors are going to be looking for. Now, week 4 is all about structuring your pitch assets, okay? Now that we have the right structure for your pitch deck, you've gotten the VC analyst feedback, you know what needs to be changed, this is where we need to start putting it together, okay? We need to build out a one-pager from your pitch deck. It's fairly easy to do because it's going to be pulling some key highlights from your existing pitch deck to be able to create into a one-pager that is highly effective in grabbing the investor's attention. I often see this overlooked. Most founders don't really invest in creating that one pager, and that honestly that is a mistake because you don't want to share your pitch decks right off the bat. Create a one pager that sort of teases them, gets their interest, and then invites them into that conversation to be able to share your full deck and get into a meeting with them. So that is one aspect that's overlooked, which we'll focus on in week 4. Our VC analyst will also work on helping to craft a professionally drafted investment memo, which is what investors are going to want to see and what they usually work with. This is no frills, no design. It's a simple document, but has bullet points on exactly the information that they're looking for. Now, our VC analyst will be able to pinpoint exactly what needs to be included in there and help draft it for you. And one last aspect of week 4 is actually creating your media kit, right? This is going to be for publications. It's going to be for writers, for journalists, anything that can help, to get some media buzz and attention, and anything that they're going to need to be able to cover a story if they want to do a write-up about you. Okay, in week 5, we focus more on the press and media. Now, again, this is something that most early stage founders don't actually put focus on. They go straight into their fundraising. But just remember, just as you're going to do some homework on your investors, they're obviously going to do some homework on you. They want to see, do you have a bit of credibility, a bit of maturity? And when you get featured in, press mentions or in mainstream media, that is already an initial signal to them that, okay, you've reached a certain point where this is something that can gain traction. So being able to create those press releases and media write-ups for the company and also the founders is going to be crucial at this point, and it's what will help you too. Okay, doing the press distribution to some major media outlets that focus on startups, on business, on tech is going to be one of the parameters during this week that we want to cover. And of course, we'll start building out a tracking and reporting mechanism to make sure we're identifying where those media mentions are. If you or your startup gets mentioned in mainstream media, these are things that you can then use in your pitch deck, for example, as featured on Forbes or Business Insider or Digital Journal, so that you have some credibility to what you're building and that your story is out there as well. That's really going to grab some investor attention. Now, when we go to week 6, this is where we look at the data room setup and configuration. Okay, data rooms can be something very simple like a Google Drive or Dropbox or a OneDrive folder if you want to go down that route. Or it could be something more advanced where you're housing all of your assets, but you're also tracking who's accessing that asset and how much of it they're consuming, what's their engagement like, do they have any questions. It could all be contained in one place, and that's your data room. Right? Choosing which data room to go with is something that we need to consider. Obviously, there's different budgets for the type of data room that you want to have based on security, based on features. These are things we'll map out, and we actually have a recommendation for one that's fairly new, but also fairly amazing and doing things that the other service providers are not doing at a fraction of the cost. So these are things we'll get into to help you identify which data platform to use for your data room. The next step is how do you structure all of your folders and assets within that data room so it's easy access for your stakeholders. Your stakeholders could be your internal company members. It could be your investors that you're reaching out to. It could even be some media outlets that you're pitching with that press release, so that they can pick up different assets or different documents that's going to have all of the information that they need to understand a little bit more about the business and to even draft those write-ups. One of the things as well with the data room is that you can actually brand it and give it a branded experience. And that, again, is not something that a lot of service providers provide, but it's something that can be done fairly quickly, fairly easily to be able to just take your pitch and your company to the next level. And really, that does stand out. If your investor sees, just a standard pitch versus the experience that you're giving them, it's something that's going to put you, in their favor, and it might even help you to move that conversation along the pipeline. And then, of course, just the basics on how to control access to the different things that you're sharing. Again, depending on what type of content you have in your data room, how sensitive that information is, it's very important to make sure that that control or that access is controlled. And that you can add or revoke access at any time. These are some of the things that we'll walk through in week 6. Now, in week 7, we actually focus on building out your investor database, right? Now that we know who your ideal investor profile is, we also start looking at how to find them, how to identify who they are, based on that niche or industry or mandate that they're focusing on. Which means we might need to gather, their email address, their LinkedIn profiles, their mobile contact numbers, depending on how we structure the journey for your startup. So there's different places we can look for it. Of course, we're not going to find all the information. And that's where that additional layer comes in. How do we fill in those missing gaps, right? We might be able to find, their LinkedIn profile, but we're not able to identify their email address or vice versa, right? We want to be able to make sure that the data we have is complete, it's accurate, and that it has everything that we need, and that data is enriched. And that's why I'm saying choosing the CRM to go with will highly influence that decision. But whatever you're working with, there's always additional layers that we can add on top of it to make sure we have the most accurate data and the most accurate information that's stored in that CRM. And based on the campaigns that we're running, depending on the outreach sequences that we're launching, based on the replies that we're getting, based on notes that we're adding, we want to make sure that that CRM is always up to date with the latest information. And there's ways to sync all of that so that, it's not a manual task that needs to be done either by you or by your team members. So that's something that we cover in week 7. Now for week 8, okay, it's all about crafting your pitch and your outreach. So it really narrows down in how to pitch yourself and your startup to prospective investors and how to create that ideal, perfect, cold to warm pitch, right? Like I mentioned earlier, this is an art that we need to perfect. And cold outreach, while it can be annoying to some, when it's done right, it can actually be the perfect approach to land your next investment from investors that you haven't engaged with before. Now, one thing to remember, I've been on that side of things. Investors do get pitched a lot, and that's why your messaging is going to be crucial here. You don't want to, beat around the bush, put in any fluff on there, or even just ask for a meeting after first email. It's not going to work. There's certain approaches that we need to take when pitching to investors, and this is what we cover here. Okay, how to also prepare for your investor meetings and deliver your pitch. That's another crucial element, right? If you're able to land that meeting, great. What's the next step? How do you make sure that you're avoiding some common mistakes that first-time founders make when meeting with investors? How to know what questions to ask them, how to know what to focus on in that pitch is going to be crucial. Okay. And also how to get feedback from your investors and make the necessary adjustments. Depending on the approach that we're taking, some investors would be interested, some of them won't. And they'll say it off the bat. This is not something in our focus area. This is not something in our mandates. This is not something we're interested in. Whatever that reason is, let's try and get a reason behind it. Okay. Even if you have a conversation with an investor who might be interested initially, but somewhere down the line, they come back with a no. What is that reason so that you know what needs to be adapted, changed, or fixed in that process? Now, in week 9, this is kind of a bonus module, but it narrows in on your LinkedIn strategy. Now, again, depending on your market, where you're based and who your investors are that you're targeting, LinkedIn can be a highly effective strategy to complement your, to supplement your current investor engagement outreach. We do use it as a way to create a multi-touch campaign, but some investors are not very active on LinkedIn, some are. So how do we identify who's going to be the best ones to engage with? How do we create some LinkedIn outreach campaigns that's really going to help nurture and build those relationships with them? What tools and platforms can we use to help you with your LinkedIn outreach? There are some automation tools provided that you stay within the limits. There are also some tools that we can use to help you craft your pitch and content that you can create on LinkedIn to start attracting some interest from investors. And what are some of the common mistakes that startup founders make when using LinkedIn, and how do we avoid that? Okay, these are all of the things we'll cover in week 9. Week 10 is really gearing up for those mock pitch sessions. So a mock pitch is pretty much a run through of your pitch with your team members, with myself, with our VC analysts, so that we can identify where the gaps are in that pitch. Okay. Your pitch, it has to be engaging. It has to capture that attention, and it has to be able to convert to the next phase, right? In this process, you're going to get constructive feedback to know what needs to change or what needs to be tweaked. And it's also about practicing your different pitches, right? You're going to have, obviously, your 60-second or 1-minute pitch. You're going to have a 5-minute pitch. You can have a 15-minute pitch. Your goal is to be able to know how to condense it into those different pitches, what to include in each of them, and how to navigate it. Because a lot of times I've seen founders, especially technical founders, go in depth into explaining the solution, how it works. And that alone, takes half an hour. And when you're doing that, when you're pitching to an investor for the first time, that's not something you need to focus on. That can come in at a later stage to show them how the whole process and system works. In your initial pitches, it's all about that high level engagement, and it's about piquing their interest to know this is the problem, this is the solution, this is how we solve it, and this is the opportunity that's awaiting for you. Okay. And also some guidelines to follow when pitching directly to an investor. Again, we don't want to make those common mistakes. Let's have a checklist to make sure that we've complied with everything that we need to make sure that we're going to deliver the best experience, because we only have that one shot when you do pitch them. So let's make it count. Now, in week 11, it's all about getting you investor ready. Sorry. And with this, in this week, I actually have a checklist that I built up of 300 VC questions that we need to go through to be able to answer, to make sure that we are 100% ready for anything that an investor can throw at us. Now, again, this is something that I've seen live, where founders, they do get a bit defensive when investors start grilling them. And that's where things can really, derail. So the best way to actually be ready for that is to work with this checklist to make sure we have the answers to any questions that investors might ask, so that they know we are 100% prepared and we are ready to handle anything that they throw at us in a calm and collective manner. The moment you start getting defensive is where those red flags start coming up, that, okay, what are you hiding? Or are you actually prepared for this? Are you ready for this? These are some of the questions that start running through the investor's mind. Okay. Another thing we want to focus on here when getting investor ready is, what are some of those key metrics that are actually going to lead to funding, right? Simple things like when you look at traction, right? You can definitely land an investment by being pre-revenue. But honestly, 80% of investors that you speak to, especially in a seed round, want to see some sort of revenue traction to be able to justify, yes, this is scalable. So these are some of the things we'll go through to identify what are those key metrics that's going to lead us to funding, and how do we put priority in making sure that those metrics are looking good, or that we can get it to a point that's, investors are going to be impressed and want to take the conversation further. Okay, again, common fundraising mistakes by first-time founders and how to avoid them. A common one that I see most often is founders not being able to accurately identify their targets or their target addressable market, or their total addressable market, so your TAM. A lot of them will say, look, it's a $100 billion industry. If we just get 1% of that, we'll be sorted, $1 billion. But what they haven't actually figured out is, to be able to get that 1% of that market, it's actually going to take the, $300 to $500 million worth of funding to be able to reach that. They haven't worked out backwards in terms of how to properly address their market. And sometimes they haven't done research into the market to know who are the key players, what is the infrastructure available that you can leverage. Again, these are all giveaways to investors that you haven't done your preparation, you haven't done your research. That, again, is a red flag. So how do we make sure we're avoiding these common mistakes, so that, when you step in there, everything is ready and all the pillars are ready to be knocked down? And, lastly, we look at what investors are looking for and how do we give it to them, right? If we can make it as easy as possible to give investors what they want and what they're looking for, then, again, it just puts you into the, the positive pile that they're working through, and can just help you to stand out a bit more and also move the conversation along a lot further. If they really are interested, then could it be something that gets closed a lot quicker rather than, them going back and forth asking for information? Let's have it all prepared and ready to go. And then lastly, in week 12, it's all about building up your fundraising dashboards and reports. Now, we do this for sales, so why wouldn't we do this for your fundraising, right? Your fundraising has different deal cycles, different deal stages, and it also has a pipeline health. We need to know what is that pipeline health. We need to get those reports. We need to get those insights and those metrics for us to be able to identify what needs to change in our strategy and in our process, right? So having these dashboards, having these reports, maybe, you're working with multiple investors to be able to raise your round. So how much do you have committed? How much do you still need to go? What's that process going to take? And can we predict how long it would be so that we can also prepare accordingly? These are some of the things that we will cover in that week 12 to build out your dashboards, your reports, all using the CRM that we're going to be leveraging so that we always have up-to-date insights into our fundraising campaign and our strategy, and just to make sure everything runs smoothly. So that was a quick deep dive into the Piperaise Pro program, which is 12 weeks long. And right now, I will just walk you through a little bit about the pricing breakdown. Okay, so for this program, it is 12 weeks long, and it's broken down. We do offer split payment options or one-time payment option. So for 12 weeks, the total cost of this program is $10,000, which you can pay one time at booking. Or if you'd like to split it into 2 payments or 3 payments, that is also an option. But every time the payment gets split, there is a 10% or 20% fee that gets incurred on top of that for split payments. So just keep that in mind. If you go with the one-time payment, it's $10,000 and that's paid upfront. If you go into split payments, it's $5,500 at the booking and confirmation. And then after 4 weeks or 1 month, it's going to be the rest, $5,500. If you want to split it into 3 payments, we can do that as well, but there is a 20% fee that's added on that. So you'd be paying $5,000 at the beginning to book and confirm your spot, and then $4,000 4 weeks later or a month later, and then $3,000 after the second month or after 8 weeks. And the reason why we do the split payment option, because I know if you're an early stage startup, cash flow is king. And if splitting the payment does help to alleviate that pressure and that stress on cash flow. It does give you time to also generate more revenue to help fund the program and so on. So this is why we do provide these 3 options. Of course, your biggest savings are going to be with the one-time payments, but we have to see what works for you. Okay, and then our payments are processed through Stripe. So it's literally, sending you a payment link and you can put in your card details and process the payments. We are US based, so we do have US bank accounts. So if you want to do a bank transfer, that's also going to be a viable option. Just, for your reference, that the program will only start once the funds have been cleared. So that's a quick look into it, and just some quick points to highlight. Who's this program for? Well, it's made for those early stage startups and first-time founders, right? If you're raising pre-seed, seed, or Series A, this program is tailored for you. It's open to international startups, so no matter where you are based in the world, we work across different time zones with startups in different cities. So we will do our best to try and accommodate you into that schedule. Just keep in mind, though, that I do have set schedules and time slots in the day that I focus on these sessions with clients. But of course, we'll try and see, what could work best based on our availability. And these sessions are all conducted through Zoom or Google Meet, and it's face-to-face, cameras on. So you'll get to see me, and it's going to feel like I'm right there with you. Now, if you have any questions, we, of course, do have some FAQs that we've added to the website, which is fairly detailed and covers, pretty much all the information that you might need. And if I switch over to the website, here it is. You can see what the program entails, a little bit about a breakdown week by week of what it covers, just as a summary. And this is where our FAQs will give you all the information that you need. Any questions that you have, most likely is listed on here. Now, what's the alternative? And this is something that I love to cover. just because most founders, when they look at this, they just look at the cost of the program. But what they're not assessing is what is that alternative cost, or what is the cost of not doing it that they haven't fully assessed. And this is where I just want to give you a bit of insight into it. So I am coming from an agency and investor relations firm background. So these costs are actually referenced from the experience that I'm going to give to you and really what's happening in the market. Right. So if you had to do an alternative cost breakdown, so if you were to go with an agency or an investment relations firm to do all of this for you versus doing Piperaise Pro. Now, the main difference between this is when you look at the engagement type. Piperaise Pro is a coaching and mentorship program. We don't do things for you, but we show you how to do it based on our experience, our knowledge. And these are things, it's more about imparting knowledge so that you take it away and can use it, for your current fundraising, for future fundraising, for your lifetime. Whereas with an agency or an investor relations firm, you're going to be working on a retainer engagement, meaning you're going to be paying a price and you're going to retain their services over that period of time, and they're going to do this for you. Now, what is that duration? Okay, for an agency, if you're going to work with them, you're going to be contracted for a minimum of 3 to 6 months. With Piperaise Pro, it's a 12-week program that we built out, we structured, you saw the breakdown, and it's going to have that weekly one-on-one or with 2-3 co-founders if needed. Now, when it comes to billing, this is where, there is that difference. If you go with an agency, they're obviously going to bill you upfront, and it's based on a monthly fee. With us, it's with Piperaise Pro, it's pretty much a one-time payment or split payment, as I've showed you. Now, what is that fee? For an agency or an investor relations firm, they could be charging you anything from $6,000 to $12,000 a month, depending on the agency. And again, speaking from experience, with Piperaise Pro, it's $10,000 once off. There's no monthly fees or anything else added on top of that. When you look at commission, right, a lot of agencies or investor relations firms do work on an agency commission basis on top of the retainer fee. And this could be anything from 5 to 15% of the total amount that you're raising, right? So if you're raising $1 million, 5 to 15% of that would actually be the commission paid out to the agency or the investor relations firm, depending on who they are, how many team members they have, the experience, the investor connections that they have, and so on and so forth. So these are things you can negotiate with them. Good luck with it if you do try, because like I said, from experience, it's a bit of a mission. Now, in contrast, when you look at Piperaise Pro, there's actually no commission, right? Because again, we're not doing the work for you. You're actually doing it. So anything that you land or raise is all yours, just because that's your money. That's what you worked for, right? Our fee stops at where the coaching program and mentorship stops. Now, the biggest difference is, of course, the ownership. All right. Now, when you work with an agency, not just an investor relations firm, but any agency, everything is owned by the agency or the firm, right? You're just renting it for a limited period, being it if they have their systems that they're going to use for outreach, if they have a CRM to be able to track the investor pipelines, if they have investor databases or investor connections and relationships, all you're doing is renting it for a certain period of time. But at the end of the day, the agency still owns all of that. Now, the difference with Piperaise Pro is that you own everything, right? Everything we build in this program, from systems to CRMs to workflows to your investor databases and your contacts, to your fundraising funnels and pipelines, to those investor relationships, right? And industry connections. Everything that we build in this program is yours. So you walk away with that. And what that means is that you get long-term value for the business, right? With an agency, it's just that short-term period. The moment the engagement is over or the contract's over, then there's no further benefits that you can derive from that. Whereas with Piperaise Pro, you can use those same systems that we set up, same approaches, same connections, and leverage that for your subsequent rounds that you're going to be raising, as you grow. Or it could be for other business purposes. What I'm getting at is that the business value of using Piperaise Pro versus the agency is that you will get long-term value rather than short-term value. And then, of course, community. So a lot of agencies, they don't have a community behind them. So you're not going to really get that benefit. With Piperaise Pro, or with Piperaise in general, we're actually building the Piperaise community. And that includes, community access to resources, toolkits, checklists, anything that's going to help you in your fundraising journey. It's also going to include access to some live streams and events that we can have where we're interviewing, VC investors, angel investors, other founders as well, to talk about their experience, to share their tips and advice. And it's also going to give you access to industry networking with founders and investors to help a bit with those warm intros and warm relationships that you can build out. So that's that's a quick breakdown of what Piperaise Pro has to offer versus what an agency has to offer. And when you look at it, the long-term value that you get using Piperaise Pro is really significant. And that's why I'm saying a lot of founders will look at this, okay, it's a $10,000 cost for 12 weeks. That's not the right way to look at it. You need to look at what is that long-term value that I'm going to derive from this, and what is that alternative cost if not going through with the program, right? If you go through an agency, there's that cost. If you decide not to do the program, okay, take no action, there's a cost involved with that as well. So you need to stop and ask yourself, what is that cost if I don't do this program? What is that cost if I don't set up a fundraising system and funnels? What is that cost if I don't land that next investment round? Okay. And speaking from experience, working with founders, I can clearly tell you that that cost is huge compared to what this price is. So that's just an exercise you need to do. You need to figure that out and decide, is this going to be worth it to go ahead? Because what is that alternative that I'm actually going to, be paying? So if you are interested to move forward with Piperaise Pro, all you need to do is come to the website. And if you're ready to get started, just click on the link that says booking form. Now, what this is going to do is take you to our Piperaise Pro booking form. And it's going to detail a little bit about the program and the information that's already on our website and that we've already covered. All you need to do is complete the booking form. So complete these fields. Tell us more about you. Tell us more about your company. Tell us more about your fundraising journey and where you're at. And you can choose, your preferred payment option. Do you want to do it as a one-time payment? Do you want to split it into 2 payments? Or do you want to split it into 3 payments? What's your preferred payment method? Do you want to use Stripe and pay online versus using your cards? Or do you want to do a bank transfer? Entirely up to you. And when are you looking to begin the program? Okay, so this is something that we take in as more of a preference. So let's say if you want to start the program 3 weeks, from now, you can choose that date. Again, that is also subject to availability. It also depends on how many startups I'm working with at a given time, because again, there is a limit. So what this means is that you can choose a preferred time, but you would need to book and pay for it to be able to confirm that spot. Once that spot is confirmed, no other startup or founder can take that. So this is my recommendation. Look at it. Look at when you want to begin the program. The sooner the better, because I've also seen a lot of startups underestimate the timelines for funding and they start too late. And by then, they're entering the red zone and things are falling apart. So my advice, as early as you can, look at your schedule, look at, the funds and everything that you're going to need to start the program, book it in, do the initial payment, whether it's the full upfront payment or whether it's a split payment, to help secure your spot. And then, that at least we can begin on that date, and from 12 weeks, keep that time period open for us to be able to meet every week and cover the spaces. So once you've done that, all you need to do is click on consent, confirm you're not a robot, and submit and enroll in the program. And then once you submit that, my team and I will actually review it. We'll make sure, yes, we're aligned. We'll send over a payment link for you to confirm the purchase. And then we're off to the races. We can get started from there. So I hope this was a deep walkthrough and introduction into Piperaise Pro, what you can expect out of the program. Of course, if you have any further questions, just use the chat feature on our website. get in touch, send us any questions that you have, and we'll get back to you. But if it's something that, you're interested in and that you think can derive a lot of value, well, then I would look forward to engaging with you and seeing how we can help you set up your systems to land you your next investment round. Thanks so much, and we'll chat soon.